Welcome everyone to today's in-depth explainer. Today, we're unpacking a truly fascinating and honestly massive macroeconomic strategy. Picture this: how does a landlocked nation, one that's currently facing some really severe economic headwinds, plan to use solid physical gold to literally rescue its struggling financial system? Well, we are looking at Laos today, and let me tell you, the stakes for the entire region couldn't possibly be higher. Let's dive in.
Here's a quick look at our roadmap. We'll start with the current Lao economic crisis, uncover a hidden, massive gold treasure, and then check out the region's first bullion bank. After that, we'll see exactly how they're turning that gold into capital, their push for international standards, and wrap it all up with what this means for the future of the Lao economy.
All right, Section 1, the Lao economic crisis. Just to set the context here, if you follow Southeast Asian markets at all, you already know Laos is in a pretty tough spot right now. They're battling some severe economic pain points, most notably a heavily depreciating local currency, the kip, and a really stubborn double-digit inflation rate that is just squeezing the purchasing power of everyday citizens.
Now, the Bank of Laos isn't just sitting idle while all this happens. They've rolled out 5 clear priority measures to try and contain average inflation, hoping to get it below 7% by 2026. They're aggressively tackling things like stabilizing the exchange rate, controlling the money supply, strengthening foreign exchange management, improving price controls on everyday goods, and trying to promote productive investment. But here's the catch: traditional monetary policy alone, it might just not be enough to turn the tide this time.
And that brings us to a completely unconventional solution. Section 2, massive gold treasure. To stabilize their paper currency, Laos is actually looking underground.
$100 billion. Just let that awe-inspiring figure sink in for a second. Research actually suggests that this is the estimated value of over 1,000 tons of unmined gold still sitting right there underground in Laos. I mean, that is a staggering amount of potential wealth for a relatively small economy.
But honestly, what's even more immediate for solving their current crisis is this second number: $10 billion. This represents the estimated value of gold that is currently being hoarded in private Lao households. We're talking wealth that is completely outside the formal financial system, tucked under mattresses, sitting in home safes. So, the absolute central challenge the government faces is this: how in the world do you coax that wealth out from hiding and inject it back into the active economy?
Enter their groundbreaking answer, Section 3, the first bullion bank. This is Southeast Asia's first dedicated bullion bank, and it's designed to be the exact catalyst needed to draw all that massive household wealth back into the formal system.
So, the newly launched Lao Bullion Bank is this really strategic public-private partnership. It launched with $60 million in initial capital, and as you can see, it's heavily backed by the private sector. 75% is owned by the family-run PTL holding, and the remaining 25% is owned by the Lao government, specifically through the Ministry of Finance and the Bank of Laos.
Now, you know how it is. Whenever a project of this massive scale launches, rumors spread like wildfire, right? Especially on social media, with people whispering about foreign influence. But looking objectively at the facts, CEO Chanthon Sithiksai made a very firm point to clarify the bank's sovereign nature. He came right out and stated, "I guarantee 100% that this bank is a joint venture between our family and the Lao government. There is no Chinese or other foreign capital involved." This really firmly highlights their strategy of using entirely domestic capital to solve a domestic crisis.
Okay, moving on to Section 4, turning gold into capital. So, how exactly does a bullion bank turn static, physical rocks into a dynamic economic engine? Let's break down the core mechanics. I want you to think about this question for just a second. How does gold actually create liquidity? Because, if it's just sitting in a bank vault, it's a great safe haven for sure, but it's essentially a static asset. It doesn't do anything to stimulate the broader economy.
Well, the user journey they've designed here is honestly brilliant in its simplicity. Step 1. A citizen deposits their physical gold, and we're talking about a barrier to entry as low as a single gram. Step 2. They receive a digital gold certificate and, get this, they earn a 2% interest rate on their deposit. Then, Step 3, and this is the absolute crucial part, they can use that certificate as collateral to secure a cash loan from a standard commercial bank. So suddenly, this totally illiquid gold becomes highly liquid capital that can be spent and invested.
And to make sure this actually works, they are pushing hard for maximum accessibility. They're literally rolling out automated gold ATMs. These machines will dispense 1 to 30 gram bars, and they're targeting not just locals but tourists too.
They're hoping to make Lao gold as famous as Thai rubies. On top of that, they've already signed MOUs with over 700 microfinance institutions. That ensures this gold-backed liquidity can reach every single corner of the country, not just the big cities.
But to attract major miners and build real global confidence, Laos knows it has to elevate its domestic game. That brings us to Section 5, elevating to international standards. Consider the critical shift happening here. The old way of doing things, miners were just exporting raw door gold with a much lower purity. It was super inefficient, and honestly, the country lost out on all that refining value add. But the new way? They are mandating local refining to 99.99% purity, strictly following the London Bullion Market Association, or LBMA, standards. This is an absolute game changer for transparency and building international market trust.
To actually achieve this, there's a massive new local refinery currently being built, and it's set to begin full operations in late 2025. We are talking about a facility with the capacity to process 100 to 150 tons of gold annually. And because the government is directing miners to refine locally before they export, this sheer processing power will eventually shift the bank's assets so that a massive 70% comes directly from these local miners. That creates a huge, brand new revenue stream for the entire nation.
Let's take a step back and look at the big picture now. Section 6, the future of the Lao economy. What does all this mean for their long-term macroeconomic vision?
Well, their timeline shows an incredibly rapid execution strategy for a project of this magnitude. The concept was first pitched to the government just back in 2020. Fast forward to December 2024, and the bank is formally launched. By November 2025, that refinery we just talked about is fully operational. And the ultimate goal? By 2030, Laos aims to completely transform itself from a landlocked nation into the undisputed ASEAN gold trading hub. And you can see their blueprint for aggressive growth is crystal clear. They're starting with about 2,000 deposit accounts in the first half of 2025, having amassed up to 600 kilograms of household gold. But they plan to rapidly scale that up, aiming for 10,000 accounts in just 1 year, and a whopping 100,000 accounts in 3 years. To pull this off, they are expanding physical branches into 4 other major provinces to aggressively capture all that private household wealth.
So why does all of this matter? Well, here is the absolute macroeconomic punchline. By bringing all this gold back into the formal banking system and issuing these certificates, they are actively aiming to reduce the broad money supply, what economists call M2, in the wider economy. Think about it. Less excess money chasing goods helps directly combat that nasty inflation we talked about at the very beginning, and that, in turn, helps stabilize the depreciating Lao kip. It's essentially textbook monetary strategy, but it's being uniquely executed through a physical commodity.
Which leaves us with one final, pretty provocative question to ponder as we watch this all unfold over the next few years. Will gold be the ultimate savior of the Lao kip? Or is this just the first, albeit necessary step, in a much longer, far more complex economic recovery? It is a bold, massive experiment in macroeconomic policy, and there is absolutely no doubt that the entire region is watching closely to see if Laos can, quite literally, strike gold. Thanks for joining me for this explainer, and I'll catch you next time.